Mm-hmm.
Okay, we're there.
Yep, looks
I'm
great.
guessing. Perfect. Okay. So I thank you, Stacy, for putting this fantastic virtual summit that everybody needs, and they can still, and doing it on the weekend is so great, um, that everybody can be around their family, take some time out, and attend any sessions they want to. So they are growing so fast, and it is crazy. And they are learning. And we had some Friday. I attended few of them, and they were so powerful, badass ladies that started motivating me as well. And I started working on my business. I'm like, I'm going to just listen to her voice and work on my stuff that I need to. It was so exciting. I was so thrilled. Well, you know, tax time is here. And for us and for my clients, tax time is every single day, every week, every month, to make sure that we have the money that we need and we can create those passive income. So I am going to take you through how to discover, to unleash the power of QuickBooks. Even though we are using QuickBooks as an accounting software, we're going to talk about accounting and financials more, and being ready for tax time, what to look for as well. So it all starts with a mindset, right? Like I said, these ladies are so powerful in our group. You have to be accountable. If you are not accountable by yourself, get a friend to be accountable who has the same needs, right? Or who's lacking in their business or moving forward. So you may have couple individuals you may be working to be accountable, or find a coach or a mentor or somebody who can walk you through the steps and be accountable. If you're going to be accountable, you will get that cash flow, right? You will generate that income and the money. When you do that, when you're accountable, you create that cash flow. You have to record it, and you have to be responsible to review those reports at all times. It's not only about your profit and loss and how much profit you made at the end of the day or the month or the year. It's over a course of years and years. So if you're accountable, if you are generating that cash flow, buying and selling those properties, or just using the Burr method, be your own CFO by reviewing your reports, learning how to read the reports, and be ready for tax time anytime, because it's not only one time, it's every quarter you have to make your estimated taxes. So if your books are not accurate, you cannot go for tax time. You cannot make your estimated income tax schedules. You cannot go and meet a tax strategist. You cannot do so many things. You cannot go and get those loans. You may be denied also. But as you know, in order to build your wealth and improve your business smarts, that is the real estate business smarts. You need to know about real estate ins and outs, right? You need to learn real estate accounting and how to be your own CFO, whether you're starting your business or you are not, or you're a seasoned investor, or you may be a wholesaler, or you're just getting your feet wet and learning. Now, if you do not want to learn accounting, it takes years of practice. It takes education. Well, I'm an accountant and a real estate investor. I started my business 22 years ago, and one of my clients just pushed me into real estate and threatened me that, hey, if you do not go to this real estate association where people are killing over somebody who can help them with accounting and bookkeeping, you are worth every penny. So if he's and I was working part-time, mind you. He said, if I do not go to this association meeting, he's going to drop me as a client. Or, well, he's not going to be my client. And he was bringing 75% of my revenue. talk about putting your eggs in one basket, right? That was enough to scare me. And I said, okay, I bit the bullet. It was an evening meeting and I went networking. Once I walked in there, everybody gravitated towards me and said, wow, we need you, we need you. And thus my journey started in the real estate arena for the accounting and bookkeeping, controllership, and CFO. So, how did I get started? Just like you have multiple hats. You may be working a W 2 job, right? A full time employee for somebody else. You may be, trying to get your feet wet and get some revenue on the side by jumping into real estate. The same way, how did I get started? I was working as an employee at a manufacturing company. So, behold, I got into an accident and I was pregnant in my trimester. Well, that accident gave me a big shock, and I was barely able to sit for 10 to 15 or 30 minutes. So, for 5 years, it took me to get myself healthy, get myself so I could sit for an hour or 2 hours at a time. It was a journey that I had to go through. And with having a little kid around, it was more difficult. The mindset was totally wrong, bad at that time. I was down in the dumps. Well, why was I down in the dump? Because of the accident, or I could not sit for a long period of time? No. I could not hold my little one from who was laying on the bed to feed him and by putting him on my lap. Luckily, my parents were here and my husband was so supportive that, by the way, his name is Robin. He helped me through. I had long hair till my waist. He used to wash my hair. He had the patience. Ultimately, of course, I cut it down. Now you can see how short it is, right? Well, that's okay. But it changed the way I looked at things. I needed an income coming in for my pocket money. So I started my bookkeeping business and accounting business. And of course, one thing left to another. So you see that income stream. When I was working and I started my second income stream, I would not have struggled in that 5 years. We were in a financially very bad situation because we went from two-person income to one-person income. By the way, my son Justin, he's 26 now, married, and he is perfectly healthy. So, where did the journey leave me or got to me? As I got the real estate client and I went to the association, I started giving courses. The courses I gave was for accounting, for real estate, using the Burr method. My first course and guide was only for 50 pages. As I kept on giving courses one-on-one and in a group session, people said, well, we want more documentations. So when we go back home, we have something we can take along. Well, few of them would say, well, I have a commercial property, residential, vacation. I do flips. I manage condos. The others said, well, I'm a property manager as well for other landlords. We had agents and brokers. We had all kind of businesses. And not only that, the real estate investors were also doctors and had a retail store and a manufacturing store. So you see the bundle of clientele that came in, and we grew so fast. As of today, I have approximately 20 courses in the real estate industry and for QuickBooks Online and QuickBooks Desktop. And our books, printed books, are around 600 pages. Think about from 50 pages to 60 pages, and they are very specific to what we teach and to the segmentation of that industry. Well, as my journey went along in my accounting business and my being an investor, I became well known and I started speaking at QuickBooks conferences and real estate associations. And that's how I met Stacy. And I have been a part of Stacy and been working with her in sense of educating her members and her group of badass women who want to go to the next level. Along the way, I did get certified on top of being a QuickBooks advisor. So, what am I going to cover today? I am going to cover how to avoid the costly common mistakes in QuickBooks. Remember, I had my education that was worth every penny going to college and taking courses and getting mentors and coaching in the accounting industry as well, specifically for real estate, was a very important piece that I had to learn and I had to invest in. That was my missing puzzle piece as serving the industry, accounting, right? Well, of course, the real estate investors being one of that, there were so many missing puzzle pieces that I learned along the way that you are also learning at this virtual conference of badass women. So, with that, with the mistakes that my clients made and the initial couple challenges I went through, I had to establish processes also and view my business financials. The same concept applies to you. You have to build your processes, you have to build your workflows, procedures, and not only for how to buy and sell the property, but also, or hold the property, but also for everything else involved. And that allowed me to become the controller of my own business, CFO of my own business, and my clients as well. And of course, lastly, we are going to save some time to answer any questions you have. So I also have a giveaway, a worksheet that I have created that helped my clients manage um, gather all the money that they needed for each and every transaction where it went. So here is a link. I will have more information later on and as we go through. So let's get started. How do we avoid your costly mistakes? So before we go there, let me ask you something. I am doing the talking right now. I would like you to take some time and share. How do you track your expenses? Right. Do you use paper and pencil? Do you use, Excel? Do you use other softwares? If you use other softwares, you have to also share. What do? Are you flipping properties? Are you a broker? Are you an agent? Are you using the Burr method? What do you do? Are you a syndicate? Do you manage condos? Do you have vacation rentals, residential? I mean, there are so many segmentations in the real estate industry. Are you a traveling nurse business, right? Do you service that community? Whom do you service? So, depending on what you do, you are going to select the software accordingly. So, does that software allow you to reconcile your bank accounts, your credit card accounts? Does it let you reconcile your loan accounts? If you're not using QuickBooks, if you're using another software, does it calculate the columns every day you enter a transaction or every month? Or does it give you a report by year? Say, suppose you're renting a property. Can you pull up a report for each year in on one page and see what your gross profit is and your net profit is as well? Can you see all your cash flows, your balance sheet? Even if you're using QuickBooks, what do you think is missing? Are you confident in your numbers? If you are not confident in your numbers, please do share You don't have to, if you're not confident in your numbers. You can always text me at 215-579-1465. But take a piece of paper, sit down and write what is missing, right? So let's go ahead and see your costly mistakes, not yours or mine, but the things that you need to keep an eye open. So SSN, Social Security number. We are just starting out our business, right? Or you're a seasoned. You do not have an LLC. You're not a partnership. You're not an S corp. You're not a C corp. So that means you're using your Social Security number for every little thing. Please stop using your Social Security number. Go to the IRS website and get a free EIN number. That's Employer Identification Number. That's what I did. And all my clients who are small Ps and have just regular LLCs and are filing Schedule C, they are using the Social Security number. If you're giving somebody W-9, do not put your Social Security number. That is your identity. You don't want the whole world to know what is your life about. What is your personal information? Think about privacy. You can use your employer identification number. Now, true, you may need your Social Security number to get loans or open a bank account, right? And that's okay. Or open a credit card account. But you should not be sharing your Social Security number with Tom, Dick, and Harry. Second, employer identification number. You can go get it free on the IRS website. All you have to do is Google, get an EIN number. You don't have to pay anybody for that. Commingling funds. You starting your business, right? Or you are thinking of starting a business or going into real estate. You came to this conference, and I am not sure whether you had to pay or enter your credit card. Or when I go for a free course, they always ask me for my credit card information, or a software company. When I sign up for a free software, they ask for a credit card info. Well, what are you using? Your personal or your business? You should always put your business credit card. Now, I am not saying you should get a credit card in your business name, but just open a credit card, a second credit card, and use it only for business expenses. Why? It is going to save you 50% of bookkeeping and accounting headaches. Open a second bank account, if it is even in your name, and use that bank account to pay for all your business expenses. Real estate is a business. Any money that you spend on buying a book or listening to a podcast, which you had to pay, a coach, a mentor, a software, you went and got a desk and a chair, and you see that light, that's a business expense. Okay, so get a separate bank account and a credit card and use that solely for business. It is going to save you 50% of your headaches. Trust me, I'm talking from experience and my clients' experience. So the next one is, what is the costly mistake, right? What are those? I forgot to put my timer in. So Stacy, if you can ping me if I go overboard. Closing cost. So I'm going to buy a property today. I read a post on Facebook. It says, how much income tax should I pay? I purchased the property for 100,000. My I my expenses were 50,000, and I'm going to sell it for 150,000. So I will make 100,000 as profit. How much tax should I pay? Really, guys? You bought the property for X amount of dollars, but did you add in your closing costs? Did you add in your loan costs? Did you add in your overhead expenses, your phone bills, your travel, the list goes on, your meals when you had some, when you went for meetings? Did you add your subscriptions? Did you add any expenses? Now, if you have that on hand, then your closing cost, loan cost should be included. Your holding cost should also be included. The holding cost includes your legal fees, your electric fees, your gas, oil, along with that. And overhead expense is so a big enough an expense that everybody misses. Now, if you have multiple properties, you can take that overhead expense and split it between properties. So before you start your business, you need to budget and think ahead 1 year. Budget for 1 year past and see what your expense is going to be. And don't forget to add in the accounting, bookkeeping, and taxes part into your accounting for your net profit. So what is your gross profit? You purchase the property, right? You first of all, you sell the property, then you add up all your expenses for that specific property, and you deduct that. That adds up to your gross profit. All the overhead expenses would be any expenses that is not related to a specific property. You have to have a number in your mind. If you do not, then just say $1,000 or $2,000 and move on for each property. Now, if you're only dealing with one property for the whole year, then your overhead expenses is going to be high. And that's how you come up with your net profit. Okay, so keep in mind your closing cost, loan cost, settlement cost, closing cost, as everybody calls it, is on your HUD sheet. Now, when you buy a property, where does accounting and bookkeeping come in play? You have to sit and learn how to read the closing document. We have saved overall $500,000 in the past 5 years by reading and analyzing their closing statements. How you would be asking? If you look in there on your HUD statement, you will see attorneys who withhold money for septic tank or a roof, or could be anything. The lender withholds lender deposit for one reason or the other. If you go ahead and decipher that HUD statement, you will find hidden money sitting there. What is the other thing that is missing? When you sell the property, and if you have a hard money loan, you always ask for the payment statement from the hard money lender. Why? Because there is escrow money that they are holding to pay taxes. They don't refund it to us all the way. Not always, but once in a while. So it's very important to keep an eye on those little dollars, which you must have heard, a penny saved is a dollar earned, right? Now think about the 500,000 that we save for our clients. I'm not necessary that each and every of our clients has that issue, but aggregate, that is a lot of money. So why do we keep track of books? Your loan is denied. Your That is a big thing, because you don't have anything to show on, because your debt ratio is high. Okay. If you went to your tax accountant and you got your tax return file, whatever their qualification may be, if it is a CPA, then make sure they are licensed. Their license is current. You can go to a CPA website and check if they are currently licensed or not. Because the CPA can call them themselves as CPA even if they are not licensed. Now, EAs is another category that is recognized by the IRS. And there are tax preparers who are not a licensed CPA or an EA, and they are still considered as a tax preparer. Well, they may have the knowledge of real estate, but the key of the knowledge is with anybody whom you work with or you hire is the real estate. Now, remember, the segmentation of the industry which we have, our courses, is the segmentation that you need to think about is where you are going to start doing your business. And you need to find that person who is well versed in that segmentation of the real estate industry. If you are going to invest in condos, you need to find somebody who knows a little bit about condos. Okay. It is very important. That's why we have this badass ladies having a niche in their specific segmentation. I heard condo, I had vacation rentals, I had, Stacy's right there, with storage units. Um, I think I had Linda, I listened to for condos, and the list goes on. Then we have vacation rentals, and the list keeps on going on. So make sure you find. If you check my blog, I think Stacy has a link. I have a list of questions to ask your CPA. Okay. Now, once the tax return is prepared, make sure it reconciles with your reports. Again, we have found many hidden gems that were not accounted for when the tax returns were filed. So where we come in play, we look out for you as a client rather than work for the CPA. So we are the in-between person, right? So we always reconcile our clients' books with their financials after the tax returns are filed. And we communicate with their CPA if we have any questions along with the client. Now, the tax preparer may not take your depreciation. Well, if not, then you need to ask them why. There may be a crazy strategy behind that. So it's very important. I am not trying to be your tax preparer. I'm not giving you advice on taxes, but these are the main things that I find. So you have to be ready to ask those questions, 5 W's: how, what, why, who, which, when. And you know how we have the kids, we ask them 1,000 questions. This is your kid. This is your real estate business, right? So the question is, when do I start? You don't have accounting background. Can I do my bookkeeping in 30 minutes? Start right now. If you thought you are going to go into real estate, document each and every expense, because that expense can be deducted. Should it be deducted? I am not sure, okay, but can be deducted. If you don't have accounting background, that's okay. You can learn to do your bookkeeping if you wish to yourself, and then outsource and have somebody do your monthly checkup. If you want to concentrate more on your business, on building your real estate, then outsource the full thing. Remember, you need to be accountable. Can you do the bookkeeping in 30 minutes? Hell no. Can you do the bookkeeping in 30 minutes? Hell yes. If you do it every day. Got it? So there's always a yes and a no and a maybe. So, in short, what is your time worth? Right? Can you outsource it? You know, what do you do? What would you do with that free time? You can free up and learn more about in your real estate industry, and put your 100% where you can make your profit and increase your cash flow. So we're going to talk about softwares really quickly on different versions. So how do you define which software should you be using? You just don't go with the software because your accountant said so, you read it on the forums, you saw a review on YouTube, you got a discount, got it for free, and one software is cheaper than the other. No, figure out what segmentation you're working on, what automation you want out of it, and what you want to accomplish, not today, but 2 years down the road. It's worth well spending the money ahead of time than later. If you are a property management and you manage X amount of properties, select a property management software because it has a lot of automations. Now you must be asking, Geeta, are your clients property managers? Are they using QuickBooks? Yes, they are, but they are not small companies. They are bigger companies who have employees who are using QuickBooks for property management as well. You can definitely use QuickBooks for accounting and financials. We'll go through a couple reports pretty soon. And it all depends on the type of rentals, number of units, and your automation, right? So for example, if you do commercial rentals and you're selecting a property management software, does that property management software calculate your CAM expenses automatically, right? With the flick of a finger. If it is a no, then that's not the software for you for commercial property management. Then get a software which works for residential and then tweak it. So you don't have to pay that extra dollars. Does that make sense? Okay. So it depends on what type of rentals you have, number of units, automation. We love working with Buildium and AppFolio, Rent Manager as well. We work with accounting softwares as Xero and Zoho too. So quickly, I'm not going to spend too much time. There's pros and cons. If you don't have the money, use Pro. It's 1 to 3 users, one-time purchase. It does not make backups. And you have to buy a new version every 3 years because of technologies changing and features changing as well. Going with the Plus, it's a subscription module. You get unlimited support, but it is not industry specific. That's what you're looking for, industry specific advice and solutions. The new thing they added in 21 is you can upload mobile receipts as well. With enterprise version, it is from 1 user to 40 users. Our property managers love this version. It is on subscription based because we have 20 to 40 custom fields we use to use QuickBooks as a property management software and an accounting software as well. QuickBooks Online, my clients love it and they hate it. So I hated it years ago. It has advanced so much that it is crazy. If you are in real estate, you must start with QuickBooks Plus. I know it's a little bit more than the other version, but you should track your single property because you're starting in real estate with the goal to grow. And you want a software that will grow with you rather than switching it over later on. It costs money at a later time. So, QuickBooks Advanced, you have up to 25 users, 48 custom fields. I tell my clients if they are in real estate and managing their own property, QuickBooks Advanced is the way to go. Does it cost money? Definitely it does. Everything costs money. Even that cup of coffee at Dunkin' Donut for $1 or Starbucks $5, right? So make sure you get the right one. Like again, I said, I am not going to spend too much money. If you are a vacation rental units and you have a whole building you're managing, you may have a store downstairs. So QuickBooks also offers you the point of sale software to track your inventory and run on mobile. Saying that, remember I said I'm going to jump through those software. It's not about selling the software, it's about making the right decision. If you have any questions, send me an email, contact me. Let's talk about process and procedures. Anything you do today, being in this 3-day virtual conference, did you start writing your processes and procedures and workflow? What did they talk about? I I sat down to one of the meetings, and I had different sheets taped on the wall. As I was listening to it, my workflow was going on for each one. So let's see how we can do. Build our processes and procedures. I'm going to walk you through, and it is going to open your mind what you should be doing for your own business as well. It's getting you started. So 5 things you should track. And everything I talk about is applicable to QuickBooks, definitely, but other softwares, I am not sure. Each software varies. What do you need in each transaction? You need to know the date, whom you paid, why you paid, which account did you pay from, bank, was it construction loan, was it credit card, was it from your personal pocket, and which property did it belong to, right? And I have a worksheet for you that I talked about earlier. Download that. That will get you started. If you are using Excel and you're happy in Excel, which I do not want you to do, but if you want to stick with that, make sure you have the columns as is listed on my worksheet. It's really going to help you take the next level. Where are you saving all your documents, your receipts, closing docs, statements, whether it may be any statement, right? Credit card, loans, any communication, you have to save them as PDF on your computer, right? Or use a third-party software. If you're using it, if you're saving it on your computer, who is backing up that document? Who is backing up all your documents from your computer? Use an online software. We use Carbonite. There are many other softwares that back up your whole computer, all your data securely. We use Carbonite, okay? So you can see, even though all the documents on your computer, you don't have to worry about it. It automatically backs up. Be careful when you use free softwares. At one point, they get limited as well. The reason I tell you to download the PDFs is when you close one bank account, some of the banks don't give you access to the PDF. If you want PDF like 2 or 3 years back, you're not going to get it back again. So make sure you save each month. That's why you need to do your bookkeeping if nothing every day, not every week, every single month. You go and download those documents. So if anybody asks you or whenever you need it, it's right there. You don't have to log in. So where are you saving them? Create folders and go forward, right? So how many bank accounts do you have? Please do not be crazy like some of my clients do. Do not create a bank account for each property unless your business is set up in such a way that you are required by law to create a separate bank account for each property. Do not open a separate credit card for each property unless required by law. Why? It is a disaster. Trust me. Now you may be saying, well, I'm following the profit first method. Right. We preach profit first, right? Whether you're flipping properties, you're renting, whatever you're doing, it tells you to create those buckets. Yes, because you cannot manage your money. You don't know where your money is. And it all starts with being accountable and managing your business, your accounting and bookkeeping, and learning to read the reports. You need to learn to manage your money, right? So, what is a workflow? It is a sequence of steps. I went to Home Depot to buy something. What is my next step with that piece of paper? Receipt, right? What is your process? It's your set of instructions that anybody can follow. If you can't do it today, I can come in your place at your office of your home and take over. It's same thing like how you are going to hang this light up on the ceiling. I was telling my husband, I need to hang this on the ceiling now. I am blocked totally. How are we going to do it? I don't like fixing anything. I love to fix accounting. I love to fix accounting numbers. I am good at that. But fixing, putting a nail in, forget it. So, procedures, how to follow your step-by-step instructions. You create your workflow, your process, and you follow the procedure. For anything you do, from making that phone call, calling all those owners if they want to sell their property, sending text messages, you have to have a workflow process procedure. You have to. It can be any way, on a piece of paper, Excel sheet, Google Docs, you name it, write it down. Are there free softwares? Definitely. Use it, make sure you have it documented, and go forward. So while creating your workflow process and procedures, you will create your own checklist, worksheets, tasks, and manage your projects. There are many softwares that you can manage your projects as well. So if you are going to redo a kitchen, you have your project, you have your electrician, plumber, come on, kitchen cabinets, help me guys, your subcontractors, your contractors, you have them create a project as kitchen and list what date they're coming in. Did they give you the estimate? What is their problem, and so and keep it in a software or piece of paper that you can go through. Because if today you are laying in bed sick, somebody can take over. That is the key on running your business and being a CFO as well. Now, managing projects. Why is it so important? All these things to accounting and bookkeeping. Say, suppose you're getting a kitchen done and you have a contractor who gave you an estimate for, say, $20,000. Put that estimate in QuickBooks. As he gives you a bill, write a bill from that estimate and pay him. So you can get a report. Hey, he gave me an estimate for 20,000. I paid him 5,000 today, 5,000, month ago, 2,000 months ago or weeks ago, right? And I know what my balance is. I know what my cash flow is going to be. Got it? So we need to know what is your cash flow. We're going to talk about a little bit about cash flow also pretty soon. So you have to plan, you have to be accountable, You have to measure and you have to be realistically and make a plan. Avoid the chaos. Be productive and active. 5 things you should avoid in QuickBooks. Account names. Do not put Gita Faust as an account name. That is not a name. Account name is, you know, your loans, your secured loans, unsecured loans, primary loans, vendor deposit, auction deposit, so forth. Do not use the bounce check feature, transfer fund feature. Do not use units as class name and names on chart of accounts. A vendor name is not a name, is not an account name. Okay, account name is travels, meals, office supplies. So how do you set up your books? You set up your books in QuickBooks. This is what we use. Properties are always classes and customer jobs. Your units are only customer jobs, are jobs of properties. Your tenants are jobs of units. Okay. Units and tenants do not go under classes. Hear me out. They do not go under units, under classes. Okay. So again, where all this comes in, remember all we talked about. The main thing that you need to segregate is repairs, maintenance, improvements, and rehabs. On that piece of paper you get from anybody should say whether it's a new install or is it it is something that is going to either increase the value of the property or increase the life of the property. That's how you are going to differentiate between improvement, rehabs, and expenses and maintenance. Okay. Cost segregation is the process of identifying personal property assets that are grouped with real property assets and separating out personal assets for tax reporting purposes. Remember, if you save by escalating your depreciation today, this year, when you sell the property, you are going to, that depreciated amount is going to be added to the bottom line. How much time do I have? Oh my God, I am running really short of time. Okay, I'm going to go through really quick. We're going to go through some reports very quickly. Okay, this is for a rental property. I've dumbed it down really so I can get an idea. If you need a chart of accounts, Google on IRS Schedule E. You will get a basic chart of accounts. Okay, each client of ours is different, but your profit and loss should not be more than 2 pages. 1 to 1.5 pages ideal. Balance sheet. Current assets is your bank accounts. Other current assets are properties that you're flipping, and deposits you're paid out. Fixed assets is depreciation, the properties that you are renting. Liabilities, current liabilities is liabilities that you are going to pay back within a year, like your credit cards, right? Or private loans or your own money. Long-term liabilities are money that you are going to pay after 1 year. It's very simple. Fixed assets and long-term liabilities are any money that is going to be held for more than 1 year. Equity, assets minus liabilities is your equity. You can look at it the other way. Liabilities plus equity is equal to assets. Okay, it's very simple accounting, but you need to learn the buckets accurately. Cash flow. You can keep your cash flow on cash basis, accrual basis, or a hybrid basis. Cash basis is money coming in, money going out. Accrual basis is when you receive the vendor bills. You add in your loan amount on your balance sheet, right? But you do not, when you enter that in, you create that invoice for the tenant. Now, my clients are hybrid. Some of them, they use a third-party property management software to manage their tenants. So we do not create those invoices for tenants, but everything else whenever they have to pay money out is on accrual basis. So we use a hybrid basis. It's very important to know that. Um, Debt to equity ratio we talked about. I'm going to take you through quickly on EBITDA is earnings before taxes, depreciation, interest, and amortization. Why does it matter? It matters when you go to get a loan. It matters to the banker and the lender. They want to know how much you're cash flowing without the interest. So you can see on the bottom, take a picture if you have to. For the interest, depreciation, income tax line items go on the bottom, and you will know what your cash flow is. Okay, so here's a missing piece worksheet that I've been talking about, and let me know if you have any questions. I'm trying to pull up my chat. Do we have any questions for me?
Yeah, we do. Let me ask a couple. If you use a property management software like Stessa that allows you to upload receipts and documents, is that sufficient?
Right. So there is no rule per IRS which software to use and how to keep your documents. Does that make sense?
Mm-hmm.
So it is your call how to track those documents. As long as you can find it.
Okay, somebody's asking about the online feature. Is QuickBooks Online okay? We use QuickBooks Online.
Yeah, it is okay.
Wow.
It is definitely okay. Yes.
Why do you explain why you feel one should not have a bank account for each property?
Oh my God, there are so many questions in here. You'll have to email them to me so I can help everybody out later on. So it is crazy. It's a bookkeeping nightmare. If you have multiple bank accounts, multiple credit cards for each property, you are going to use the wrong credit card or write a check from the wrong bank account. Then you're again back into the same nightmare. So if you use the worksheet which I gave you, as long as you have all the details on that one transaction, you're good to go, even if you have one bank account and one credit card. Unless you have your entity set up in such a way that you legally have to keep that bank account for each property. I'm sorry, I just spaced out.
That's good. Good. No, I mean, the reason I had her come on, Gita come on, is because, I mean, essentially, like, this is the worst part of investing, but it's like the most important part. You have to know your numbers. The best investors, I always say, the best investors are the most resourceful investors and the ones that truly know their numbers on all levels. So you have to make this a priority. Capiche? I want to hear some capiches in the chat.
Yes, somebody said they are using QuickBooks self-employed version, and it is not okay because you cannot get your balance sheet. Okay, and the most important thing I forgot to mention, you use a software or learn to customize that software that you can get a balance sheet and a profit and loss for each property. Got it? You have to have a balance sheet and a profit and loss for each property, whether you're flipping or you're renting. Does that make sense? I'm sorry, I'm all red today because I have all the lights reflecting on me and my cheeks and everything is red. I'm so sorry. I'm not this red.
Can't say anything. I've been here for 3 days, man. I'm like, I have to be on camera. See, everybody else, they can turn their cameras off. So
I know.
I got to actually look halfway decent.
Oh, see, somebody went to Venti too.
Okay, I definitely recommend talking to Gita outside of this if you do not have somebody that you can talk to. This is somebody that you want on your team. This is like Gita, somebody you want on your team to be like running thoughts by and everything, so okay, one more last question. Do you use classes to create a separate P&L and balance sheet? Explain class, because this is the most important thing, classes.
Right. So in QuickBooks, there's a feature called classes. Okay. And it's only available in QuickBooks Online Plus and QuickBooks Desktop. It is available in QuickBooks Online Plus and QuickBooks Online Advanced. It is available in all the versions of QuickBooks Desktop. Now, it's a feature called class. The reason we use class, you may go to Home Depot. I'm going to talk about Home Depot, right? I have so much to talk about, but limited time. So if you go to Home Depot and you fill up your cart with all these materials and you get one receipt, but those materials that you purchase belong to multiple properties. So when you go into QuickBooks, you have to enter one transaction for that Home Depot receipts, and you can split the materials between properties. And class is the only feature which is available in QuickBooks Online Plus and Desktop, that you can split those one transaction and map those materials in between multiple properties. Does that make sense?
Yes, classes. You have a class for every single property, and that's how you organize your QuickBooks, is per class. So you can run class reports. That's what I love, is I'm like, okay, let me just see this address. That's a class, pull it up and take a look at those numbers for that property. That's what she's talking about. You don't really need an account for every single property, because you can just do it in a class system.
Right.
One more final question. Do you recommend hiring a bookkeeper and then upload reports to the CPA?
Right. So I did not even talk about that. I didn't want to, these sessions are no selling sessions. So I didn't want to talk about too much about outsourcing. Yes. You need to decide how much you are worth. What is your time worth? Is it in dollars, or is it family time, or taking that next vacation? Right? So that is very important. Or you want to go find that deal. I told one of my other biggest client, they wanted to learn in-house. I said, go find one property. Only one property. They have like 10 different businesses, all in the real estate arena, right? One is flipping, one is rental, one is construction, one is engine and energy. I mean, it goes on, list goes on. I said, find one property, rental property, and you have my fees paid up for the whole year. And that's what he did. He's saying, okay, I'm going to do this. He did that. And he's saying, oh my God, I spent only 2 weeks finding this property and my fees are paid off. I don't even have to do it. It's a rental. I don't have to worry. He has a property manager who manages his property. He's saying that's the best decision I've made, rather than sweating every week, every day, every month to get it ready, get my books. Outsource, concentrate on what you can do best and what you're good at. I'm still learning real estate accounting. I take courses. I take 40 to 50 hours courses in accounting. I take another 40, 50 hours in learning the QuickBooks software as well, because it's customizing reports, learning how to make sense of those reports that make sense to you as an owner. So outsource saves you a lot of time, or learn, but don't expect to learn from YouTube and everywhere else, because you're going to learn only one solution, one tidbit of it. You want a full solution who can answer 95% of your questions, and that 5% is left for your accountant, your tax preparer.
Perfect. Awesome. All right. Well, thank you so much for hanging out with again, Gita.
You're welcome. Anytime, anytime.